Hello everyone. Before seeing our pre-market regular stuff, yesterday 20th September 2023, Fed had their interest rate decision, FOMC meeting and Fed chairman had his regular press conference. So let's see all those in detail and its consequences. If required, please pause and have a look. This is the S&P funded price movement yesterday. This itself telling everything in detail about what we want to know. Basically, at 2 p.m. they announced the interest rate decision. After that, there was some little bit of hesitation, but once the Fed chairman started his speech, it was just one way downside. I mean, as everyone expected, they did pause the US Fed interest rate at 5.5%. There was no surprise there. But there were three important things he said that hurts the sentiment in the market. First, he said he expects one more rate hike before this end of the year. I mean, at present, officially, the interest rate band is 5.25 to 5.5%, which is otherwise simply called 5.4%. Now, that before this end of the year will increase to 5.5 to 5.75%, otherwise simply 5.6%. Here, for this increase of 25 basis points, 12 out of 19 FOMC members voted in favor. So, that's the first negativity. What it means is that majority of the FOMC members are very much inclined with the another rate hike. Second, he gave the future interest rate guidance. Again, I'll show it somewhere in the screen as a table. If required, please pause it and have a look. At the end of 2024, I mean next year end, earlier he projected the interest rate should be around 4.6%. Now that he increased the projection to 5.1%. Similarly, in 2 years' time, at the end of 2025, the projection was 3.4%. Now that too increased as 3.9%. Basically, in both the cases, he increased the interest rate projection by 0.5%. Again, this means that longer interest rate for longer period of time. So, obviously, it's against what market wants and also what I want as well. I mean, in 2020, I got this house mortgage at the fixed rate of 1.87% for 5 years. Here, UK's central bank interest rate and US Fed interest rate most of the time will be more or less similar. So, if things happened as per their projection, then in 2025, I'll be getting the interest rate around near 4%, which I absolutely don't want, but it's not in my hand to control. So, please pray or wish me that I will earn enough money to clear off this mortgage before 2025. Anyway, enough about my story. Back to market. This longer interest rate for longer period of time was the second negativity last night. Third, he expects PC inflation to reach the target of 2%, more possibly only in 2026. I mean, here, this graph projection, he showed this in his press conference. In this, the red stripe is the median of projections. So, as per this, it will be down around 2% after 2025 and will reach 2% only in 2026. So, longer the inflation, longer the uncertainty around interest rate decision. So, clearly, market don't want this. Thus, because of this press conference, at the end of the day, Dow Jones down by 0.22%, S&P funded decreased by 0.94%, whereas Nasdaq crashed 1.53%. Because of all this drama, VIX increased over 7% and moved above 15. And one more thing, again, this hawkish speech increases all the bond yield to new high value since 2005 second day in a row. However, this did favors the Indian market finally by reducing the oil price. At the time of this video, Brent crude oil is trading at around 93 US dollars per barrel. In an hour ago, WTI crude oil closed at 89 US dollars per barrel. Coming to Indian ADR, only Infosys closed positive. HDFC Bank had another terrible day as it lost around 6%. Here, after reaching the peak on 14 September, in 4 trading sessions, HDFC Bank lost almost 11%. In comparison, in Indian market, it dropped only 6%. So, there is a difference of 5% arbitrage opportunities in the market. As per ADR, by the look of it, there is a possibility that today also HDFC Bank might drop another 3 to 5%. Regarding the reason, in short, HDFC Bank CFO in the conference mentioned that after their merger in 1 month, HDFC Bank gross NPA increased to 1.4% from below 1.2%, and because of that, Jefferies downgraded the HDFC Bank target price. Again, all this we discussed in detail in the last pre-market video. Moving on, about GIFT Nifty, it closed at 19,905, which means it's kind of indicating the gap down opening of another 60 points. So that's what happened in US market last night. Now let's discuss some India stock and sector specific. First, as per the government officials, India is planning to offer PLI scheme of 18,000 crore rupees for 6 new sectors such as chemicals, shipping containers, vaccines, toys, bicycles and footwears. So based on their history that how much they can able to get from the previous RODTE scheme, we can see the impact on those particular stocks. Second, Infosys was positive on Indian ADR since they announced that they formed a strategic collaboration with NVIDIA AI technology. As part of the agreement, NVIDIA is going to train 50,000 Infosys employees. So let's see whether that positivity carry forward to Indian market or not. Third, yesterday both FII and DII was net sellers. FII net sold for 3,110 crore rupees while DII net sold for 570 crore rupees. This is really a worrying thing now. Finally, HDFC Bank, Reliance, Hero MotoCorp, JSW Steel, Bosch and IndusInd Bank all got the huge short build-up, whereas Axis Bank, M&M Financials and Hindustan Copper got the long build-up. So as usual, be cautious while trading in those stocks. As a summary, US market was not good last night, especially Nasdaq. However, the positive news on Infosys might balance that out. But the real worrying thing was HDFC Bank and Reliance. Clearly, as per ADR, HDFC Bank still got more negativity. Let's see. Then about Reliance, if we compare the GDR to Indian market, unlike HDFC Bank, both Reliance dropped around 5 to 5.5% in 1 month period. So there is a chance maybe Reliance will not have a problem today. Again, all these are speculations. Only time has to answer. Then about the things to look out. Today, first, HDFC Bank's senior officials attending the credit conference with JP Morgan and similarly Adani Green officials credit conference with Nomura. But I'm not sure about any macro during our market hours. However, in the aftermarket hours, UK interest rate decision and in the night, usual US weekly jobs insurance data, crude oil inventories and Philadelphia Fed manufacturing index are some of the important macros scheduled to release. Coming to technical, yesterday, Nifty had its biggest single day loss since July. It opened gap down and decisively braked out the psychological 20,000 mark, which completely weakened the whole market sentiment and pushed the Nifty further down to the support around 19,900. Thus, on the daily chart, it has formed a bearish candlestick pattern with a long upper shadow and short lower shadow. Now, this new candle confirms the bearish reversal pattern in line with the bearish tri-star pattern which it formed on the previous 3 days and which we discussed in the last pre-market video. Nifty is in the process of retracing the rise it has witnessed in the last 1 month period, 19,223 to 20,222. On the downside, now having moved below the immediate support of 10-day exponential moving average 19,940, I expect it to slide down towards 19,840 where the 38.2% Fibonacci retracement level is placed or to the lower 20-day exponential moving average around 19,780. Still the daily momentum indicator still has a positive crossover. So in terms of levels, 19,840 to 19,780 is the crucial support zone, while 20,050 to 20,100 shall act as the immediate hurdle zone. Then in case of Bank Nifty, it has also entered correction mode. It was unable to break the previous swing high, which was a sign of weakness. On the downside, Bank Nifty can drift towards 45,070 to 44,930 where support in the form of 50% Fibonacci retracement level and the 20-day moving average is placed respectively. Considering the sharp fall, a pullback is possible. However, I expect it to be sold into and that should be the ideal trading strategy from short-term perspective. On the options front, the maximum call option open interest was at 20,000 strike, followed by 20,200 and 20,100 and maximum new call option open interest was at 20,000 strike, then 20,100 strike. Hence, on the higher side, the resistance is at 20,000 to 20,100 levels. Whereas the maximum put option open interest was at 19,800 strike, then 19,900 and 19,500 strikes, and maximum new put option open interest was at 19,900 strike and then 19,700 strike. Thus, 19,900 is likely to be crucial. Breaking that might cause further correction towards 19,700 levels. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.